welcome to another episode. Today I'm joined by Mike, who's the co-founder of Nomial, and Tom, who's the co-founder of Gas. Guys, why don't we start with quick introductions?
Sounds good. Thanks, Arjun. So I'm Mike, co-founder and CEO of Nomial. Nomial is a protocol that connects solvers with liquidity. We do this through an inventory access layer where solvers can borrow capital on demand rather than having to source that capital and hold it on their balance sheet.
Yeah, man. Thanks for having us. My name is Tom. Yeah, I'm the co-founder of Gas.zip. We kind of do what once was like a gas refuel type service and has kind of now expanded into like a very fast, very quick, like instant liquidity bridge that leverages kind of a lot of these like design philosophies of kind of intense and solver based type like bridging relay systems. But generally, we're a bridge that caps the liquidity per user transaction, between $50 and $100 at any given point, which has allowed us to scale like bridge offerings to we support like over 350 chains today, primarily EVM, but we've done a bunch of the kind of new alt VM stuff. The only thing we've really stayed away from is Cosmos. But generally speaking, we're at very small scale, but instant liquidity based bridge with kind of very high chain coverage and offering. And excited to kind of talk about some of this stuff. I was telling them a bit earlier before this call, we're going to talk about like solvers and intents and stuff like this. And we're kind of in a position where we looked up one day and we were like, is this what we've done here? Like, is this what we have? Like, is this like the thing that we built? So, I'm excited to, dig into it a little bit and see what you guys think about some of this.
Awesome. So like just to set context, Tom is running a bridge and he's in the trenches running a solver, and Mike is building some of the tech that can help solvers, right? And over the last 6 months, 12 months, we've heard a lot about solvers and intents. And generally the take was that running a solver is hard. And there are more like intent networks than solvers. Like that was the take 6 months ago. Now I want to kind of get a better sense of like what's the current state of intents and solvers. And like there's a lot of tech being developed in this part of the ecosystem, and like just get our thoughts on what's going on, how we see things shaping up, right? So just to kick us off, like that was the first hot take that I wanted to touch upon. Like Philip tweeted the other day, there are still more intent networks than solvers, right? So why do you guys think that's the case? Like I have my opinion, but I will let you guys start. Like why don't you start, Mike?
Sure, yeah. I think it's definitely like a bit of an exaggeration, but not too far off. I mean, I actually think it's pretty close. So for any, we do see like a lot of the intent networks running their own solvers, or like an intense-based bridge generally runs its own solver. And this is like a pretty standard bootstrapping mechanism for like any system. Like we saw CowSwap did this in the early days before they had a more robust solver ecosystem. They had a baseline solver. I'm not sure if they're still running it, but I don't think it's anywhere close to the top solver anymore. They've built out a really solid ecosystem. But for the cross-chain side, it's definitely more dependent on those like baseline implementations. So we do see a lot that are maybe one-to-one. It's like you have an intense-based bridge, but it really just has one solver, maybe a second solver. And then, a cross has like, I think like maybe 20 to 30, but we're really only seeing like the volume concentrated in the upper levels there. So we're talking about like very few actual like solver entities, which I think is, this is like one of the big motivations for why we're building what we're building, is to reduce the barriers, because there's a reason why there aren't more. I think there's a lot of factors, but it comes down, I think, to capital constraints. But yeah, would love to hear like from Tom about this.
Yeah, I think I generally agree with the hot take, right? Yeah, it's like I think it's like mostly true, right? It's like it's a good tweet, right? And it's generally mostly true. And the best one thing I was surprised about once we kind of went out and started looking into a lot of the stuff that I kind of commonly joke about too is everyone's kind of like, they'll go out and build something and they're like, oh yeah, and then like the solvers are going to take care of it. Like I hear this all the time from like projects. They're just like, that part, that's the solver's problem. That's not my problem. And I'm just like, well, like, who are these solvers? You know who these solvers are? Because I would love to talk to them too. Like, who are these solvers? And come to find out, there's solvers out there, like for sure, right? But it's not like, I think we overestimate to the extent of like how many people there are out there with liquid capital across dozens and dozens, if not larger amounts of chains, willing and readily available to, begin solving your order flow, right? Even if there is like good return to be made on some of that order flow. The opportunity cost in crypto today is still also astronomical, like liquid capital, right? Telling somebody they can make, kind of little bits of money here and there on like cross-chain order flow it's good for a handful of like liquid capital out there. But generally, there's I haven't found tons of solvers. They're out there for sure. And the ones that do it are really good, right? I think partly, kind of what some of the stuff Mike was saying, right? I think some of the stuff with like the base implementations, right? There are a handful of solvers that have, taken those and run those on a bunch of kind of these larger scale cross-chain or like more new project app implementations. It can do it, it can be successful, right? And that's where you kind of have, I think, some level of like new entrants entering the market. But then you have something like Cross, right? Or like a highly competitive market. And like the base implementations are just arguably useless, right? Like you're never going to win order flow if you just like fork the Cross like base implementation and run it out. Like once the system has order flow that is like actually useful to like a capital provider, where like, oh, this is valuable, some like really good solver comes in and rebuilds this entire thing into like their own solver stack and just crushes it, right? And then you get this like really highly competitive, which is really good for the users too. Now you're getting, better quotes, you're getting faster speeds, you're getting more professional solvers and market makers like that, right? So there's kind of like a scale where it's like when it's in the early stages, like arguably anybody can be a solver, right? And like, yeah, you kind of see a lot of these bridges where one solver running the entire system, right? And that's kind of on that end of the spectrum. Then at some point, that order flow like crosses like a chasm. It's like, oh, it's like become like professionalized now, and like order flow is very valuable. It's very useful to some entities out there, and a bunch of the solvers that begin playing that game, right, become very sophisticated. And I think that's kind of where you see some of the cross and others going. Right?
I think so. Like this takes me to like three takeaways, right? Like one is basically initially we talked about how the cross-chain order flow is just not high enough for some of these solvers to come in, right? But I think that is sort of changing, especially with what we saw like 2 weeks ago with Solana. Right? A lot of people wanted to go from EVM to Solana, so there is more and more order flow coming, but it is still on the teams to run the solvers, right? Like the first solvers are still run by their teams. But like to your point, there was also research about solvers, right? Like how once there's order flow, it's going to be dominated by the top 3 or top 5. And that is what we're seeing play out in across, right? So it's almost, we're in a very weird position where, let's say, an intent-based bridge comes to the market. Initially, they have to run their solver. And once they do run their solver and like there is enough order flow and there is enough market, the market is dominated by like the top 3, top 5 players. So it's almost like we're seeing there's only enough order flow for like 5 players at best. And I'm not sure if like, do you guys see the direction where we see more and more sophisticated like market makers type of solvers? Because like the top 5 will always win the most order flow, or I don't see a world where like there are 50 solvers across like all of the ecosystem and they're competing in like different marketplaces.
Yeah, I think what we would like to see is a separation of the capital risk from the actual solving and infrastructure. So I think what we're seeing now is like solvers have to be market makers. They have to take price risk. They also have to run infrastructure to match fills. They have to run infrastructure on multiple chains. It's very complicated, but it's kind of bundling like what you had with like single chain solvers with the kind of requirement to actually be a market maker and provide capital. With cross chain solving, like with the cross, the solvers have a float. Like they have to front capital for all the fills. So we see like, I think Across did like about $1 billion of fill in the last 30 days. That all is fronted by solvers, like during time windows. But it's not the solvers, in order to be competitive, have to actually float the capital. So with that dynamic, I think there's competition we should see competition to like provide capital for lower and lower yields. Right now, if it's all concentrated, that means that capital provider is effectively charging whatever they can in the market. And with more entrance of like, if it's easier to provide capital toward this, then I think we'll see competition. Ultimately, that's going to result in better price for the user. But I think like, with what we're building and other teams, we'll see a lot more entrants, and they will be big players, but small players as well. But I think everything that everything that we're building is actually trying to lower the barriers and increase competition so that so that more players are able to do that.
But that's where I'm like kind of finding it challenging to see how that would play out, because even if there's like more competition, it does not really do anything good for that marketplace, right? Because it does not matter if there are like 50 fillers if, let's say, only the top 5, top 10 are going to win most of the time. So like I'm personally trying to understand how would that play out, and I'm not sure like if Tom you have thoughts, like let's say if you have more capital, do you think like running your own solver, would you be able to win more order flow?
So to some extent, I think we are maybe an example of that happening in some worlds, to where we have but they take this all with a grain of salt, because we take very small order flow, right? In a general sense, we take like sub $100 order flow, right? So it's very small. But kind of one of the main theses we had with why we go out and support like 350 chains is that if I can support a bunch of this middle and long tail like routes and always keep them capitalized and available for a user, that whenever you need one of those, you come and find us, you use us, and then maybe because of that, and when you were there, you also see that we have base, we have Arbitrum, we have, kind of the main routes that you also can go anywhere else and get your order flow completely through, right? That maybe you'll come back as a user and give us some level of order flow to a chain that, is more of a primary chain that is well capitalized everywhere else. So part of our thesis was, if we, expand the ability of this solver to cover a level of ground that no one else is covering, accepting that order flow and dealing with that will benefit us on a bunch of the other routes that is much harder to compete in the marketplace alone, right? Which has worked to some extent, in regards to us attracting just users to the product, right? So by us kind of going out and doing a bunch of these long tail routes, I think has very much assisted in us being able to kind of bootstrap a user base for the bridge, for the product, and for a bunch of these routes that if we were just running a bridge for Arbitrum and the kind of standard L2s, would have been normally quite difficult to bootstrap a user base for, right? So that, and again, this was like a very specific kind of implementation of this, to the extent that like we're running a small scale bridge user facing product as well too. So we kind of have like a different incentive as a solver as well. We're not solely in the business of like generating a return on the solver capital, right? And you see this kind of happening with some people in the industry today. You kind of see it with us. You see it with Relay, right? You kind of saw it early being done with like Orbiter. I think they were one of the first few people who kind of like illustrated this, like, oh, it's a solver system, and the solver like economics and footprint don't really match what you would expect from like a perfectly rational, like financially driven solver, right? You're kind of going to chains that like maybe don't have the order flow yet. You're kind of like going to these places, right? Because you're bootstrapping the product with it, right? So I think there's a world where that becomes useful, outside of just like we're Gas or you're a Relay and you're doing this to like build and bootstrap your network, right? So yeah, I think there are worlds where it makes a lot of sense to try to do some of this stuff, right? And we also, I've probably spent, maybe a couple of weeks thinking about the idea of, I think I tweeted this once, like, how do you like make solving, how do you do like solving for dummies? Like, is there like an implementation of that to some extent, right? Like, how do you make this easier? Is there a world where a professional solver doesn't want to solve Taikio to mode, or like, like these like middle tail to long tail, whatever it is? And if like a professional guy may never want to do that, but is there a reason for, some normal person, or like not even normal person, somebody who would like maybe provide Uniswap LP, like that like normal profile of a person that would want to, capitalize that route for some reason?
So that's probably not, right? Like in your own experience, you only do these routes because you get users through it, right? So for a normal person, I'm not even sure if there's enough money to be made here.
Yeah, so like the argument that I found kind of in favor for this is that if you go to these middle and long tail chains, and I don't know who these people are or how they exist for just reference here, but go to like some like long tail chain and go look at their decks, and like there's 700 guys there providing liquidity like on like weird dex pairs for tokens that I've never heard of in my life. And I'm just like, yeah, there's like incentives sometimes, right? Sometimes there's not incentives, right? It's just like capital makes its way to such weird places in some of these chains that every time I look, it constantly surprises me. And that's like the four argument I have found in this is that go look at any chain and like there is so much weird dormant capital in so many weird places. And I'm just like, who are you? Why are you here? Do you even know what the smart contract, like the protocol risk is of what you're doing here. And why do you have $40,000 locked in this thing, right? And this is what made me think of that, because I was like, oh, if I can find who these people are and I can make like a solving for dummies easier type thing, can I take your 40 grand and like shove it in a solver over here? And like, guess what? We can bring people to your chain now. We can provide more liquidity. And for some reason, you have a vested interest in this long tail chain succeeding. But like, this is like helpful for you too. Like, let me find a better use of your capital here than LPing some weird token pair on a long tail chain that gets $3,000 in daily volume, right? So that's kind of the core argument I have internally found for that.
So go on. No, go on.
I was going to say, those people they're never going to run infrastructure. Like this, there's a big difference between like running your own, like a solver is effectively like a bot that you run, like setting up all the infra to do that versus like putting some funds in a contract on some weird chain in some weird place. That's so much easier. And if people can do that in a way that gets them some amount of yield from bridging, like there's no way to do that right now. I can't take passive capital and put that toward bridging. I think that's like a big, what you're saying like is, I mean, it's funny that is the case, but there is random capital and we don't know where it's coming from. And who knows if it's like profitable for them or not, or if it's like all incentive based airdrop farming activity, but it's there and it's there to be repurposed. But right now there's no mechanism for doing that. And they're never going to run infra. So I think that's an important point.
Is that your target customer? Like, is that the money that you're targeting, Mike, to get to someone like Tom who can use it in their bridge for solving?
It's a source. I wouldn't say that's like our main target. I think liquidity. There's also more like large incentive liquidity, like an ecosystem that's bootstrapping, like a new chain, for example, like a big new chain launch happens. Like they have an intrinsic incentive to support solvers and to support intents. And right now, that's, as far as I know, that all happens through like private and custodial arrangements. So we're just trying to make a protocol that effectively decentralizes that arrangement. And that can be, random user like aping in some capital that doesn't really know what they're doing, or it could be like a large professional entity. So it's really, there's multiple sources. I wouldn't say that our main target audience is like the random degen though.
Got it. And so let's say like you managed to get this inventory, right? And now, Tom, for someone like you, how does this inventory help you? Like, does it help you increase the limit on the orders on like the most popular routes, or does it help you scale to like new chains, or is it both? Like, let's say, I don't know, like there are new chains coming up in Arbitrum's ecosystem. So do you use this capital to like expand to those chains, or do you use this to like, okay, from $50 cap, I'm now going to raise the cap to like $100 on Arbitrum 2 base or something like that?
I think both, right? But primarily also like, increasing throughput, right? Like our throughput is a direct function of available liquidity at any given point, right? Like within our network. And it's also somewhat of a function of like available liquidity to the extent that we feel like comfortable and secure putting liquidity into our solver, right? Like, I mean, this is like also like a very terrifying problem of this, right? We just kind of put a bunch of money into this, what Mike said, right? For lack of a better term, bot, right? And so however much money you're willing to like put in there at any given point is, so being able to kind of also make that process potentially a different custodialship of the funds is like a very good prong of this to try to solve as well. But generally, I mean, our throughput is a direct function of however much liquidity we have at any given point. More liquidity, we can always jam throughput up now more. And then if I have kind of a like tappable loan resource of liquidity, kind of describing, expanding your chains becomes much easier in the regard of, I don't really have to take into consideration, what do I think the order flow will be over here? How much money do I think I need to capitalize over here? I now have like another, popular route that gets put into like the top of the stack of things that need to be rebalanced or reloaded and stuff like this, right? So it kind of, it pads the whole system, right? Just like more liquidity obviously is very clearly better for any solver. Or the optionality to pull from a larger pool of available liquidity from a solver's POV just, multiplies your throughput and your ability to complete this order flow, like in every direction, right? So I think it's beneficial in all those regards, for sure.
Mike, anything to add to that?
I'm curious about like how you guys think about risk as well, like because you operate on so many chains, Tom. Like that's amazing. You have 350 plus chains supported. But if you're solving in like long tail assets and you hold those long tail assets on your balance sheet, like you might be making some profit from that, but then you have that asset on your balance sheet. What if that asset goes to zero and then that eats all your profit? So how do you guys think about that type of risk?
Not even if the asset goes to zero. You know what I've had happen like 6 times? They turn the chain off and they just delete your money. That has happened like 6 times. Wake up and it's like, oh, okay. I'm like, for those long tails, you solve with a very small amount of liquid capital in those, in those assets at any given point, right? Which is also a function of that's why some of these limits are so small, and kind of within the system. Like, I don't know how you would solve for, a lot of these are ETH, right? A lot of these long tails are still ETH, and like that's okay, right? You could, in theory, run like a really large solver with the inventory being ETH. Outside of like chain risk now, right? At least your price risk is kind of been scoped. You could hedge that, you do a bunch of things. But there's definitely like 50 or so, right, that do enough volume to be interesting, where the primary currency that people kind of want over there is not ETH, and it's some general like volatile, middle, weird like altcoin, right? So yeah, I mean, our solution right now is that's why we can offer this route, right? And this is kind of what gives us an edge to some of the others. Is I'm willing to take like on some like Shibarium, like I hold like $500. Like, yep. And like, guess what? If you nuke it to zero, like more power to you, bro. You got me, right? But then, it all kind of washes out, right? One of them tanks 50%, and like I wake up one day and Moonbeam is up 8x, and it's like, okay, cool. Like we made any money that we lost on price depreciation on these other ones back today over here. So and that's like that's like what our business is about, right? We're here to complete order flow for generate a bunch of those order flow and get users to these middle and long tail chains. So part of that is just, you gotta deal with the fact that you're dealing with some undesirable assets for a while. But at scale, terrifying. I don't know who would ever do that at scale. No, absolutely.
So like Mike also did like a very interesting data thread about like 2 months ago, and one of the most interesting points there was that like a bunch of profits for across solvers was being done on fast fills, right? And how Mike defined fast fills there was like 0 to 15 seconds. But interestingly, this only made up for like 3% of the volume. So it's not surprising that users are willing to pay for like these faster fills, but technically the solvers are not able to provide this experience often enough because of these like inventory problems, right? So anything that you guys take out from that particular anecdote, that okay, if you are able to provide an experience that's less than 15 seconds, there is a user that will pay more for this experience.
Yeah, I think that was the main point. Was if you can offer users a faster option, then they will take it. And looking at the across analysis, that's really focused on the assets that across supports. So it's not the long tail. It's the major assets like stables, ETH, WBTC, and top 8 chains. That's the majority of the volumes coming from like top 4 or 5 chains. And yeah, we see like clearly that under 15 seconds generates the most profit. So if you look at all the fills they've done under 15 seconds, that has the biggest, the largest profit margin. And then above 15 seconds is actually like a lot more volume, but less profit per like dollar, effectively. So I mean, that was the interesting stat that came out of the analysis, was that there's a spectrum of like how fast the fills are, and it's very, very dependent on the amount of value going through. So there's like a lot of lower value fast orders, but then the bigger orders tend to be slower. So it's not quite as clear as like, intents are fast. I think that's what we saw, is like there's intents are fast given enough capital to be fast.
Mm-hmm. And then there's also this like relay versus across dynamic. So relay being more centralized, they can do things faster and cheaper. And like you said, users want the faster and cheaper route. So even in an aggregator, a relay might pop up at the top many times, but then it is a centralized solution, right? Like they are running their own solver. Whereas on the other side, across, because they've managed to bootstrap this order flow, and like there are more and more solvers, it is towards the other end of the spectrum. So I don't know, like, do you guys take a fundamental like first principle stance on this? Like, should it be centralized? Should it not be centralized? But at the end of the day, the user just wants like the cheaper and faster transactions, right? So how do you balance this out?
I think like fundamental take, like I don't want to see the space go toward a like completely centralized model. But I'm a huge fan of what Relay's doing. But I think there's ways to take their like ultra optimized protocol and make that more decentralized. Right now, I understand like why they built it with single solver. And if you look at it by volume, across is almost single solver as well. It is a permissionless system where I can participate, but participating at any sort of scale is really, really difficult. So both systems are reliant on single solver, but in different ways. And in the relay model, it's very simple. So I send money to the solver and the solver sends money to me, which is an extremely efficient model. But I would love to see like their model, which is, it's fundamentally different than how Across has done it. I won't get into all the details there, but I think there's a path to bringing in more solvers into that system, and we'll hopefully see that happen. More competition is better. Like if it's one solver, then you're not going to get as good a price as two solvers competing.
Something that, I mean, it's kind of on that point, but something I've thought a bit about of how we speak about this in recent regard to is, we talk about the solvers and some of the bridges and systems as like centralized, right? And it's like functionally correct of a description, right? But the thing that I then kind of think about and remember is that even in a good system, right? Like your fill is still always going to kind of be centralized to the extent that there's a sole solver somewhere that is going to bid for your order flow and then complete your transaction, right? And the kind of like decentralized or uncensorable approach of that is these solvers should have competition so that any single solver isn't able to kind of control the market and control the price. You'll get better fills as a user, et cetera, right? But from something more like Relay's POV, right? I don't know what you call it. And I imagine how Relay will evolve in the future is the first step is probably not for them like increasing more in like a permissionless solving market, right? And it's more of allowing the prong of that I think is like the centralized part, and that thing that needs to be solved from like the Relay's POV to begin with is not that there's one solver completing order flow, but that the solver that sole solver filling the order flow and that protocol that it uses provides the user with like a trustless mechanism for dispute resolution or anything of dispute regard, right? And like that's the like centralized prong of that I think that matters in the first step of it, right? Is that you can send money to like a Relay EOA, they can just take it and like you have to go file a support ticket. That's what it is, right? There's no protocol there. There's no nothing. And so that's like the kind of centralized prong that I find interesting in some of those systems prior to the idea of then, okay, we'll build like a permissionless solver market for other solvers to come in and begin competing with this, right? And that's the part that I think kind of matters in the like day one step of Orbiter, Relay, all this type of stuff is as a user, do I have some sort of guarantee that when I send money in here, if something happens, I have rules written on the chain somewhere that after X time and Y condition and Z thing happens, I can get my money back if my intent is not complete, right? So I don't know what we actually call that or whatnot, but we talk about a bunch of the stuff as like centralized, and I think a bunch of people take that as, oh, that means it's just a sole solver solving the system, right? And all I'm saying is I think there's a world where you can have a sole solver solving a system, provide these kind of guarantees in a world where we can't scam you. And then you still have problems of that being like centralized to the extent that the order flow is entirely centralized, sure, right? And there's centralization problems that can arise from that. But yeah, that's just generally, it's something I haven't seen.
It's kind of the L1, L2 dynamic, right? Like you have to sort of trust the sequencer, but at the end of the day, if the sequencer does anything wrong, the user can always come through the L1 and like force the transaction through. So if there's a mechanism like that, I think we can probably move away from the centralization word. And like you said, like just make the marketplace permissionless long term so that someone else can come in, make money off of that order, and also like give the users the funds they want on the destination chain. So I think that's probably the direction that people will take. And I feel like a lot of the verification networks or like the settlement layers in this part of the stack are working towards this, right? Like how do we make verification faster, and how do we also make like settlement faster so that the solver can get paid quicker and they can like rebalance like much faster, right? So this is like the next section that I want to go into. So there are a lot of teams that are building tech to make solvers' life easier, and a lot of this tech is still in development. And it will come out in 2025, right? So I want to go through some of these solutions and kind of hear your opinions on how do you see this helping out, or like do you not see it helping out, right? So the first one on this list is Everclear, right? They're building the netting layer, which is a very interesting concept because it makes sense. Like if there's capital being move from one chain to another, but like the same amount of capital is going in the other direction, you can just net this, right? So in theory, it makes sense. But like I want to hear your opinion.
Yeah, I think it makes a ton of sense. I think that system could be used not just by solvers. I think they talk about it as a solver system, but it's really like any value transfer between chains at scale can be netted. I think solvers are likely to be the biggest user of that. I think about it as like potentially ultra cheap way to move a large amount of capital, because in a lot of cases you wouldn't be moving it at all. It would be netted out. So yeah, very definitely bullish Everclear. And think about that as like potentially like for us, like we have protocol level rebalancing as well, because if with LP pools that solvers are using, like the pools themselves have to rebalance. So if you think about Everclear as like not just something that solvers would use, but something that protocols could actually use as well, like protocols that are operating on multiple chains, then that potential number for their total volume and netting goes up even higher. So yeah, definitely excited about Everclear, and I think rebalancing seems to be one of the biggest challenges for solvers. But yeah, Tom, I know you guys probably deal with a lot of rebalancing, so curious what your thoughts are.
We deal with like rebalancing on a very like immediate small scale in comparison to say something like a huge across solver or the across protocol themselves, right? Or one of these like really large scale type rebalancings that occur. And so like I think like for sure, like obviously like this idea of netting like makes sense, right? Like clearly and functionally, like on paper, you look at this, like it makes sense, right? And like if you can bootstrap and get that to work, then that's great, right? And it clearly works, clearly makes sense. My only like today for me is that so I've tried to use a bunch of these kind of solving solutions, rebalancing, etc. type protocols, right? And until they get to some point, though, this is a problem for me where, and I think we fit in this. I think Relay still probably fits in this, even with the size of their balance sheet today. I think even Orbiter would probably still fit in this regard. Is that when rebalancings occur, right? Our rebalancings are still generally relatively time sensitive, and due to like the amount of order flow that's coming into the system and the protocol, kind of price insensitive. Not totally price insensitive, right? But it's not like we're a professional market maker where we're trying to scrape every last bit off the table, right? And with that comes when a lot of these rebalancings occur, the most important thing is that what is identified is capital is on chain A and capital needs to go to chain B for us to continue to fulfill order flow over on chain B. And like I need that done kind of fast, right? And like I'm not talking the difference between 10 seconds, 30 seconds here, right? But I'm talking the difference between minutes and hours. And that's like when it starts to become a functional, like in the day-to-day stack use of somebody who's, I think, rebalancing, like even to the extent of Relay with millions of dollars kind of on the balance sheet doing this kind of stuff. Like there's a big difference between your order completed in minutes and hours, right? Mm-hmm. And so I think these things need to eventually get to the point where you need to be able to net this flow out with me like in minutes, or else this is just not, I can't use this as a rebalancer, right? It's not, the capital turns over so quickly in some of these systems that is not, but then you have something like a cross, right? That like a bunch of these people can functionally wait 2-4 hours, whatever it is, to have some of these things, netted out and repaid in balance. So there's different use cases for those two things, right? And I think that's kind of where the bar is probably tops out. It's something like an Orbiter and Relay S level where, you have millions of dollars on your balance sheet doing this stuff. That's like probably where you get to the top tier of, I still functionally care about when I rebalance, my rebalancing going through quickly, efficiently. And like, if that means I need to like pay like a slightly higher gas fees to use this certain, bridge or solution, like whatever, like it is. It's part of the thing. We build it into the order flow, it's built into the price of the business, right? So yeah, I think these things make sense if you can get them like to work on paper and everything. But functionally today, when I go out and rebalance, I mean, what I find is, I think I said this to you, Arch, kind of in jest, but very seriously, the best like netting network for me right now is it's Jumper, literally it, right? And it's like the best like rebalancing netting network is an aggregation of all the bridges in the world. And just like how I want to get my money somewhere, right? And that definitely changes when you get to a different scale. So
Yeah.
you take that.
There are like a couple of concerns, right? Like any intent-based network, they have settlement inbuilt in a way. Like Across has settlement inbuilt, so it's questionable. Like why would a solver in Across like wait or like adhere to the rules of another protocol, and why would Across as a network allow this to happen, right? And then like you said, like you have to also build up this order flow so that netting can happen. So there's still a lot of work to be done in kind of addressing these concerns and making it actually useful for solvers. But I think as a concept, like we will see it happen one way or another. Like someone will definitely crack it with enough order flow, and it will make life easier. And the second one was like the Interop token standards, right? So all of these chains today are launching with token standards as like the canonical tokens, right? Like OFTs, wormhole entity, and because there's no like LP required, like no liquidity required, you can just mint any amount. It actually does help a lot with like these rebalancing needs, inventory needs. I'm curious, like if you guys have thought about this, like Mike, from your perspective, this does remove like the need to have pools on different chains. And Tom, from your perspective, you can just like instead of actually going through a centralized exchange, you can just mint and burn that supply on the destination chain, right? So curious to get your takes on like interop token standards for solvers.
Yeah, so I think important to note here that with mint and burn, like interop standards, you still have a time constraint on that, and we see that really clearly looking at the numbers. So it's a lot faster than doing like a withdrawal from optimistic rollup and 7-day waiting period. But we're talking about potentially like minutes in some cases, like 30 seconds maybe at the minimum. Depends on chain finality, like what chain you're going to and coming from, origin destination. But there's still a time constraint. So then with intense model, there is no time constraint. The time constraint is however much risk solvers want to take. So if the solver wants to take the finality risk and fill this intent in 1 second, they can do that. And we see that happen across and other intense protocols. So from our perspective, there's clear opportunity to build like effectively an intense layer on top of some of these interop standard tokens. You can think about it as like the standard is very good. Solvers could use that for rebalancing. You could use that for bulk transactions or large volume transactions. But you have this market need for like, I just want to bridge in like 2 seconds or even 10 seconds. I'm willing to pay like, fraction of a BIP extra for that because we're talking about really thin margins here. Like you pay a negligible amount extra, you can bridge in seconds. That layer doesn't exist yet, but I think we'll see that emerge.
Yeah, I mean, I think I generally agree with all of that. And yeah, from at least from like a rebalancing perspective too, right? If there's a world where there's kind of a rebalancing route that I can get over somewhere by using some canonical token or even a USDC. I guess USDC is zero, right? But in theory, you could use something like a Solana with layer 0 with like the PayPal USDC or US whatever it is. There's still also a function of once I do the mint and burn, being able to have liquidity on each of those chains to then do whatever I need to do with that canonical thing that I burned and got over there. But yeah, I mean, I'm like a big fan of one, I think it's like an existential threat, obviously, to like the long tail of like liquidity bridge providers, right? Like, sure, all move to like mint and burn glory world, then like, okay, none of us are needed. But that's probably better for the end user, probably better for all of us in the long run if that somehow managed to ever work. But granted, no, it's like definitely a sick and great like development of like a team being able to deploy their own version of like CCTP for their native asset is like great, right? Like that's like a great thing, and I think that helps significantly with getting a lot of the big liquidity over to some of these new chains when they launch. It helps solvers do rebalancing and capital providing today. So generally speaking, I think it's been like a huge net positive seeing a bunch of these chains begin to adopt some of these standards. I think it matters what standard they use, right? It's just the idea that this thing exists and provides a railway to your chain is massively beneficial for everybody that's trying to do anything.
Okay, now I want to just like wrap up with one final question. Is that let's say we have all of these solvers, right? Like how do we actually scale to thousands of chains eventually? Let's say every app is a chain. Can solvers actually scale? And even if we are able to scale to like thousands of chains. Like Tom, you've already done it for 350 chains, right? So 1,000 is probably not that far off. But I know it's like a it's a different level of like engineering problem. But can we even do it in a decentralized way? Like I'm not even sure if that's possible, right? So do we see a world where there are like thousands of chains and solvers are able to scale one, and can they do it in a decentralized way, if at all?
I'll let Tom go first.
Okay, yeah, yeah, actually scaling the solver, right? Like sure, you can probably do that, right? Like it's functionally like a traditional software engineering problem at some point, right? Having like nothing to do with crypto, right? So it just becomes, a very large, like you need this node in a box somewhere that is able to monitor, sync, stay up to date, and land transactions across hundreds and hundreds and hundreds of chains at any given point, right? And then debug when they don't land, and retry, and etc. So that's just like traditional software engineering. So like, can they, in theory, like sure, right? And we're an example of at least a deployment that like, okay, yeah, I can manage and land transactions across 400 chains at any given point, right? And yeah, it like took us like a year of what I say internally is like, why this is like hard is because it takes you like a year of actually just fumbling the bag on live order flow to figure out how to like fix all the weird chain nuances that exist when you begin going to a bunch of these exotic chains, right? You like think you handle all those edge cases, and it honestly takes you just fumbling like 12 transactions to be like, oh, this is what happened here. We need to fix this and make it better, right? So like there is a problem, just from adopting new chains, to deal with that, but it's functionally a software engineering problem. So I think you can do it, like for sure. That's like not the long tail hard there. The harder thing is going to be, I think, finding people that are sickos and are like, yeah, I'm willing to go to all these places and do this, right? And provide this liquidity and capitalize these routes and et cetera, right? That's like the hardest problem of anything I've found with finding other solvers, talking to them, projects, et cetera, right? It's just who is willing to go to these places and lay this. It's almost like you were like laying like telephone lines, right? And it's like, who wants to go there and like build the telephone poles, right? And there's like not a lot of them when it's like, oh, well, it costs a lot of money to build that telephone pole, and there's like 6 people that are going to like use phone calls over there. So maybe we're not going to do that, right? And that's the hardest part with a lot of this. And sure, more people come, obviously, incentive to solvers to go over there and build it all out, et cetera, type thing, right? So in a world where there was 1,000 chains that are highly in demand and there's order flow everywhere, like I think the answer is clearly yes, right? Is that what ends up occurring? Unclear, right? So other than that, like I think it can happen if there's a world where any in some level of demand meets the requirements required for even someone like us or Relay or an Orbiter to go out there and begin laying those phone lines and these very long tail new or whatever they are, chains, app chains, whatever, right?
Yeah, I think like we see right now, Tom, you guys are probably like the only solver doing this to this extent, which is amazing. But that's you have an operation that like combines software engineering expertise and the engineering problem you talked about with the capital provisioning and risk taking, and there's really no one else that's willing to do that right now. I think getting back to what we talked about earlier, with there is capital that's willing to do that, but they're not willing to take on the engineering problem. So the odds of finding like the intersection of the two, it's pretty rare, and I think that constrains the ability to scale to new chains. So really like opening up that ability to provide capital and take the risk and taking the engineering part out of it, I think will help scale. But yeah, the risks are great. I mean, you said you've gotten chains turned off, lose all the names in the chain. That's a lot of risk to take. So there are definitely people taking risks on those chains. I mean, but let's let them do that, and the solvers do their job and connect the two together. I think that's what helps scale this.
Honestly, like it's almost like, let's say 6 months have passed, but not a lot has changed in terms of the current landscape of solvers. Like we're still making that same joke. Who are these solvers? We're still trying to figure out like how do solvers scale to all of these chains. But I feel like some of the pains are being eased with like teams like Nomial working and solvers actually getting smarter by making mistakes, right? Like you said, Tom, you made some mistakes and then you figured out how to scale to like 200, 300 chains. So I feel like we have more experience, more teams working on this problem, but we're still in a very weird like limbo kind of a situation where we don't know how this will play out eventually. So maybe like 6 months later, we can do another one and see if anything has changed, if at all.
Yeah, I do have to say, I feel much like more bullish. I mean, I don't know if bullish is the right word, but comfortable with like, even then 6 months ago, right? 6 months ago, I found like 4 people who would talk to me and know anything about any of this stuff, right? So today I feel much more comfortable and like confident in that direction to some extent that, you know, yeah, exactly like this. There are people like Mike, and there are the conversation is out there more. There's better infrastructure, like base templates and implementations being like shipped out for people and things. So I think it's like very clear that at least more people are beginning to deploy, you know, energy and effort and attempting to better this problem, right? And provide solutions to a lot of these problems, significantly more so than I saw, you know, even 2 or 3 months ago, 4 months ago, right, publicly. So I think we're definitely trending in the correct direction for that.
Yeah, 100% agree with that. Yeah, if there's any big change in the last 6 months, it's like the mind share around this
Sure.
this space within the space. And yeah, excited to do it again in 6 months and see where we've come.
Awesome. Thanks a lot for your time. And hopefully like we have some answers to these open questions in like 6 months from now.
Time will tell.